let's let's just go through some signals today. Okay. Let's talk about how the training we'll do today is we'll talk about why I'm up there. Oh, my face is up on the top. Oh, just things all over the place here. There you go. Okay. Let's talk about the signals today, the ones we can take, the ones we shouldn't take, and why we would take them. Okay. Let's just talk about that today. Okay. Um, so we'll start with US Open, okay? And we'll go through all these trades, okay? So I'm gonna tell you guys, this one came before. I don't like to trade before US volume. Now we have some people who are testing, Jur 30 during London and all those other things. I don't like to trade till US volume comes, especially on US 30. If anybody's trading US 30, the best volume is when it's open. Right? The best volume on US 30 is when the market is open and moving because it's going to pick up the most volume. It's going to be the most impulsive. So I'm going to show you guys those trades. That is essentially, sorry, I keep adding everybody in here, Greg, when you do it. So I'll show you why. Okay. And because, we had this right before open and then it goes right into volatility, right? Right around 7 o'clock, this is going to start to get volatile. Now you can see you had a few pips here in this buy, and this one was tough with that 238 right on it. And you could see there was a few pips here, but the volume isn't swinging this chart, right? And what we're looking for with this indicator is we are looking for the market to swing. That means push in directions, swing back, push in directions, swing back. That is also why, and I said it in the bootcamp chat today, is that is also why we okay. That is also why we are trading this in the 1 minute, because you don't get the same type of impulsivity on the 5 or the 15 or in those other areas. Okay. Okay. So let's start after open. Right. So if we were patient, started after open, I literally took this trade and was done for the day. Now I know there's lots of people who are here and they're trading and we want to get 5% a day and 10% a day and blah, blah, blah. I'm telling you, that is not a long-term trading strategy. It's not a long-term trading strategy because the markets can give us, if it gives us over 1% a day, that is a huge gain. And we should be quite comfortable. If we're going to take trading, and I'm not saying this doesn't give you these. Like we went over Jur 30 yesterday, and Jur 30 literally gave out like 600 pips, right? That is not normal. That would have been at 50 pips. If 2% was 50 pips, that would have been a 10. It would have been like a 15% day, right? 2, 4, 6. No, sorry, it'd have been a 25% day. It'd been a 25% day. That is not normal. And that is not something we should be aspiring to get, because when you try and go and shoot for 10 to 20 pips or 10 to 20% a day, you're going to lose the same. Just remember that it's about our capital that we protect. Okay. It's about protecting our capital. Okay. Okay. I know it has, man. I've been watching you share all that stuff. Go share some of your trades in the boot camp after everybody can see what you've been doing on Tier 30, because I know you've been sharing them with me. Okay. So we have to set realistic goals. Now you can talk, and everybody here, most people who are here have seen some trading before or been a part of a trading company before. One thing you guys are going to get from me is I'm not going to BS you. Okay. I'm not going to tell you that you could come here and trade and get 10% a day. And it is just not realistic. Now we all know that that's what they sell in the other place, right? I get 40% a week. And you guys all know that. That is not real. Because if they're going to get 10% a day, they're going to give it back as well. I don't know how many people here want to deal with 10% a day, but when you trade the amount of money I do, a 10% day would be, I mean, a 10% day would be $7 million loss. Anybody want to deal with losing $7 million in a day? No thanks. Right? So we have to understand that those just aren't realistic expectations. And if you can get 1% a day, if you can get 1% a day, and if you can keep that, right? What trading is about capital preservation. Okay. Okay. Or about capital preservation. We're trading at 1 to 500. It's a capital preservation. Okay. Most people are going to start here with low money, right? Most people are going to start here with low money. So you want to have higher leverage. I don't trade with that. I trade 1 to 50, but I trade through a copy system, if that's what you're asking. But we want to make sure, okay, 5% a month. You know what? When we get done here, you guys will get a J rant. Anybody here who doesn't trade me every day, every Friday, I do, we talk about something and I give a little bit of a rant. I'm going to talk about the 10 to 15% a month is enough. I'm going to talk about it. That's way more than enough. I'll have that conversation when we end, and I'll tell you why. Okay. We'll have that conversation. But let's go over these trades. Let's go over how we should have managed them, what we should have done. Okay. All those things. So this was our first trade after New York volume. So what we're doing here is, I know a lot of people here are brand new, and I should have realized a little bit on how I was teaching this and the pieces I was going to give you. Killshot, our other scanner, comes with a trade clock. Okay. So what this one does not come with is a trade volume time. So I know I had a lot of people asking about when's the good time to be trading. So what we're going to do is it should only take us today, maybe by tomorrow, we're going to actually attach, okay? We're going to actually attach that trading clock that we have at Killshot and move it over here so that if anybody's trading Supernova on its own, they have that. If you're here and you're in the organization, you get Killshot too, and you can overlap them, and then you can have that good volume time. That's just the best time that it's giving us our impulsive moves that we want to use. Okay. So you should, if you're with us, you have both of those and you should have that clock. I realize that most of the people in this boot camp don't. So they didn't actually get that trade volume time. So that's going to be something that we add to Supernova for people that might just be using Supernova on their own. Okay. So let's talk about the trades today. First good trade coming out of volume. We don't want to trade in here because this is open. It's too volatile. Okay. What does good volume actually mean? Okay. So good volume, so there's really three types of markets. Okay. Markets when they consolidate. Okay. Markets when they're volatile, and markets when they trend. Okay. So when markets trend is when volume is good. That means the volume is up. When buyers are buying, there is more volume of it, which tends to move the market more. When sellers are selling, there's more volume of it, which tends to move the market more. Okay. That is good volume. That's when we want to get into this market. That's when we know we take a trade. It doesn't just go 10 pips and reverse and then back to it and then reverse. Okay. So that's a good volume time. Okay. The second volume time is when the market consolidates. That's low volume. Those are being in a US market in Asia, right? When we're trading an Asian market, which I don't suggest you do, unless you might have maybe a specific pair. Like I know some of the guys from New Zealand are trading into JPN 225, right? Did you mute me? Greg, you mute me or what?
Sorry, mate. So many people joining, and sorry about that.
Greg just didn't want you guys to hear what I was having to say. Okay, so the second part of the market is when we're talking about Asia, we're talking about low volume times. If we're in a US market, the volume is going to be low during Asia because that US market isn't open. That goes the same for NAS, even for gold, right? Those things that are heavily rely on the volume that comes from the US market. That's when a market consolidates. If you go look at Asia, you're not getting big like, 50, 80, 100 pip, 100, and maybe every once in a while that happens, but the majority of the time, okay, that's when the market is going to consolidate, and that doesn't work into our favor. Consolidation is one of the hardest things to kind of manage in this market. Okay. And then the last is volatility. So when the US market opens, this market gets volatile, and it's only going to last for about 15 minutes. So at about 7:45 is when we'd start to look for volume to start to go the right way. Okay. We want to avoid volatility. That's the same thing that's happening right now with news. So things we kind of want to avoid. First, we want to avoid open. So yeah, New York opens. I'm talking about it right now. New York is opening. That's when we have volatility. We have something in New York open. If you guys want to look it up, it's called basket orders. So this is kind of a funny thing we talk about. And if you guys, this is how I picture it, right? It's like, remember how they used to show on the stock market floor? They'd be like, people would be opening the stock market and they're all like waving their tickets, right? When the market opens, essentially that's done digitally now, right? People can have pending orders for when the market opens, right? So when the market opens, that first like 15 minutes, all the orders come in. The buys, the sells, the buys, the sells. While that can just go shoot off in a direction, it can literally shoot that direction, come right back, go back up. Like that volatility we want to avoid, especially if we're using like a 25 to 50 pip stop loss. It's just going to get hit. And not because you didn't pick a right trade or pick the right direction. It's just too volatile. It could literally just wick, hit your stop, head in that direction. It doesn't work out for us long term. So those are the three types of market. The good market is when there's good volume and the market wants to trend. Okay. When it's low volume, it wants to consolidate. And when you have volatility, it's a mix and it's very volatile. We don't want to be in those two. We don't want to be in consolidation or volatility. We want to be in good volume. That's what my volume indicator gives you. Sort of a market timing, right? When London and US overlap, when London gets a big push in volume and then sort of dies out until New York comes, we want to avoid those times, right? Those times on most of the times, those times are going to consolidate. Okay. So let's just talk about these trades. This trade came right after open volatility. Okay. We do. And it comes in a nice little clock. Let me just show you. This is what you'll get. See this guy, bad boy right here? We're going to add this to Supernova. When it's green, volume's good, go to work. When it's red, don't trade. Okay. Red will eliminate consolidation and volatility. I'm going to add this to Supernova so everybody can see it. It's a part of kill shot. Okay. This is a nice little green means go, red means stop. Okay. All right. Let's get this long position and let's just talk about this guy. It's already there. Okay. Boom, 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 boom. So 2 things. Red star popped. Right. What do we do when a red star pops? As per the rules, what do we do when a red star pops? Type it in the chat. We protect. That means we move our stop into profit. You can either go to BE on this one, was a very good opportunity to go to the 238, right? Knowing that this 238 and the break past it, that if it wants to come back down and re-break below this 238, then it wants to come all the way back. And so I put it in there where I talk about the parameters that get hit. Like if this thing goes 60, I'm taking 50. I'll never give 50 pips back to this market. I'll never hold when it's already gone over half its goal. I'll never hold that. So when this thing got up to 60 and that red star was there, I went up and got to 50. I took 50 off this position. I was done for the day. Like this. It got to 50, it got to 60 for me, and my EA did it automatically. So it did get to 60. So either way, it's a red star and you should be protected. Okay. It got to 60 for me because I have some systems that just enter the trades for me. So it did get to 60 for me and it did move the stop loss on its own. Okay. And then if it breaks this 238, flashes, breaks this 238, you should at least be protected on this 238, let alone after when it broke this 238, it also popped that red star. So you should have protected pips in here, right? Minimum you could have got was 40, right? 58, 51 to this 238. Let's say there's 38 in there. Maybe take a couple out for your spread. Say there's 35 to 40 in here, at least. I got more because the red star popped. It broke this high, and I was like, I'm not letting you come back. And the EA just jumped that up there. Okay, so now let's shift to our next signal. That, and here's the thing. When we talk about this, if you're using a 2% risk reward, right, of course we have this stretch to 100, but if you're using a 2%, this was a 2% trade. Your day's done. 2%. It's done. We'll talk about that. Like I said, you'll get a little rant from me at the end. Okay. This trade I took, I was done for the day. I was done trading for the day. This first position came. It took 1, 2, 3, 4, 5, 6 minutes for me to get to profit. Done. Okay. All right. Let's talk about this buy. Okay. This buy was not a fun one. It definitely tested you. Bounced around a bunch of times. Okay. This is a beautiful A+ setup though, because look where your stop loss is, right? Your stop loss, this is a beautiful setup. There's lots of room back to that 238, right? Your stop loss is almost back to the bottom over here, right? Do you take positions when this? No. If the star is already there and that's our indication of our potential trade, I probably wouldn't take it, depending on what the chart said. But okay, you can see this one had a battle on its hands. It did get up to like 10 pips or so, right? You can see that this thing also got to 60 and it actually got all the way up to about 70 there, depending on how you held it. But it did get to 60. Let me do that, please. Okay. You can see it got to 60 on that wick. Okay. And there was a few extra here. The red star did pop right there. So I could say, hey, maybe you jammed in here and took 40 or 50. But this should have been a 50 pip trade. If you're following those rules, this was a 50 pip trade. And of course, this would have tested you in here, bouncing up and down, but it also did something else. And if I pull kill shot up, what did it do right after? You guys can't see that. We got what we call superstar, right? You guys can see it then shifted into a kill shot signal, which is another confirmation that it wants to continue that direction. So it should have been a place where you could have held this. You should have got 50 out of that. That'd have been another 2%. You would have been up 4% today on the first two positions. Should the day have been done? Yes. Okay, now let's talk about the sell. Sell comes. Okay, nice little short position here. Sell comes. Another A plus setup. Now, the only thing to be a little bit concerned of, and maybe it might have wicked you out, is when it got to that 238. Right? If you went and jammed your stop here, maybe you only got 10. And if you got 50 and 50 and you're already up 4%, you probably should have just taken this and been okay with it. If you jammed it here, it might have wicked you out, right? Because you got to protect against this 238, which it did bounce up. If you waited, followed those rules, this thing didn't get to 60 there, right? But did switch into this signal. So this probably would have been a BE at this 238, I would think. Okay. There was lots of pips in here too, right? There was 50 plus pips. You could have got 20, 30. We shouldn't have been trading if you'd already taken a couple of wins off those first one. Okay. You're on the wrong chart then. You're on the wrong chart. This is on Black Bull. We were talking about it in the other chart. You're not on Black Bull, so you didn't get that trade. Be on Black Bull. Okay. Sorry, Jay, just to clarify, did you say that anytime your position moves 60 plus pips in profit, you ought to be? Yes, it's in 100%. I'll never give 50 back. Especially if it's worth 2%, I'll never give that back. And that is actually in the little rules I wrote you and shared in the chat. Okay, and I can share it again. It's in the little rules I wrote you. Okay. Okay, so this was a good trade. And here's the thing. You might have been a little wary. Okay. Okay. You might have been a little wary because they were, like Angela just said, they were unconfirmed by the VIX, but this was a secondary confirmation right here with this signal. So if you didn't get into it there, okay, if you didn't get into it there, you should have got into it here, VIX or not. Okay. Plenty of pips on it. After I saw that triangle pop, I would have just been in it. Okay. Sell, maybe didn't take because the VIX was there. Now, everything else but the VIX is A+. Okay? And I don't know what to tell you. I'm literally looking at the chart, unless he's gone and changed something on me. Which if he has, there's going to be an issue. It's Black Bull. Not sure. Okay, this one had a bunch of pips into it too, but I just got said that this didn't confirm by the VIX, so we wouldn't have taken that. Okay? Because it's a different price action. Always. So I've said this. Oh, just asking you. It does matter because each broker has its own price feed. Each broker is connected to a certain liquidity provider, which is going to give it a little bit of a different price feed. That can affect a candle on 1 minute, 5, 10 pips, maybe. 5 pips is a difference between a Doge and not a Doge. Right? 5 pips is a difference between when this breaks and when this doesn't break. Right? So it does matter. It 1000% matters. And we were talking about it in the other chat here today. Okay. So there was pips on this one too, even though wasn't confirmed. But guess what else it did? Kill shot's up here. So kill shot would have confirmed that and you would have had 30, 40 pips on it. Would have been a nice little kill shot nail. Okay. So if you took these and followed the rules, even just this one, you would have had 40 to 50, 40 to 50. So you're up 100. If you took this and broke the rules, there was 40 to 50 in it. Let's talk about this trade. So I know some people took it. I know some people took this trade. Why shouldn't we have taken this trade? What is in our way? You know, it's okay if we take it here because guess what? There's some space, right? There's a little bit of space here to here. So we know that at least I could have got protected and maybe I got wicked out at break even right there. Here, Is there enough room? If you enter this trade and say your spread is 2, let's say our spread is 2 and we enter this trade. Okay, the close of that candle is 757.75. The 238 is 2.5 pips away. When you press this trade with your spread, you would have entered on that 238. Right? We talked about this on entries yesterday. This is not a good entry. Okay? Okay? You got to have about 15, 20 pips, right? You can see this one breaks here, 777. You have about, I mean, I probably wouldn't have taken this one anyways, but you have about 13, 14 pips, right? Yeah, 100%. If you're looking for confirmation, right, let it hit this thing. Maybe it breaks above, pulls back to it, and then goes. Or maybe it breaks above and turns into a kill shot signal. Instead of you jumping into it here, you just were a little bit more patient with it. Or you let this thing hit, it pulls back in here, and maybe you get into it somewhere in this space. Because I'll tell you, that's what I did over here. So I'll tell you, because I have had so much confidence in this thing, that I might be getting in ahead of myself sometimes, right? I didn't take this because I was like, I didn't like it. If it breaks the 238, maybe I get in here and find a couple pips. I was also already up on my other accounts. So I'm just demoing this how if I just continue to take every position, right? But I didn't take this. Okay. You enter on the yellow candle. But this yellow candle did not break that 238, right? Okay. 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 This yellow candle did not break this 238. It didn't break it. So just leave it. And I'm going to tell you guys, this scanner that's helping me so much, I got into this. Remember I told you guys that anybody was listening to that? Yes, it does. It closed and broke this 50 and turned yellow. But it needed to break this 238. The 238 is this 50 on a higher time frame. The 238 is one of the most important pieces of my trading. It is a bounce level. It is a higher average. It is a rejection level. It's a bounce and entry. So I don't trade against this thing. I don't, oh, maybe it'll break here. 80% of the time it's not going to break. Reverse first. And if you were just patient with it like I was, because this signal then came, I was already in this thing. I got into it over here. This little sucker over here scared me a little bit with this rebreak, right? And it chased me down here about 20 pips, but I got into it over here. As soon as this thing broke, pushed back up, I got into it over here because I trusted this signal so much. And I was like, okay, well, it looks like it wants to go back, maybe take another run at it. And then it came all the way back up here, gave me another signal. Then I protected. I got in behind this thing because news was coming, right? I think the dollar is probably going to drop and this thing should go shooting up. Okay. But this wasn't confirmed. We really needed to talk about this. This is one of those moments where we need to be patient. We talked about that entry. This, although the VIX didn't confirm it, was an A+ setup, right? Your stop is both of these, right? The VIX didn't confirm either of these. Both of them were still A+ setups without that VIX. So for me, I'm like, okay, what's another confirmation? Let's talk about this. Let's talk about when we see an A+ setup, but the VIX doesn't confirm. What can we have for a secondary confirmation? Another confirmation is be like, hey, maybe the VIX got this one wrong. What can we do? Maybe the VIX shifted. Okay. Maybe the 100% leave room. Maybe the VIX shifted, right? Maybe it was bouncing in here at the signal and we got to sell. We got sell right on this VIX, but maybe once it did, and it did do that, right? Once it started to bounce in here, this actually shifted to buy. So I was like, okay, when the signal came, it didn't quite have the buying power yet. Pulled back down here, it shifted to buying power, then went into a kill shot signal. I was like, okay, we can rock and roll. Same thing over here. You get this big rejection. You know you could enter here and your stop loss, like you have a smaller stop loss, right? You have 50 here, but if you go just on the other side of this, you actually only have a 40. Your risk reward's better, right? Same with this one. The VIX didn't confirm it, right? The VIX didn't confirm it, but your stop loss is 30 pips, right? Now your 1 to 2 is only 60. I don't have to go all the way down to 100, and it does get to 1 to 2 if you're patient with it. right? So this is an A plus setup. It's an A plus setup without the VIX. So what's my other confirmation? What's a secondary confirmation that'd be like, hey, this probably still wants to go this direction? Let's talk about it. Answer the question in the chat. What's another confirmation that this wants to drop? What happens on this chart right after that signal? Also, a whole bunch of volatility here that I had to clean up, but there you go. Mats has got it. O'Neill's got it. What does it do here? Breaks that 238. So maybe we got into it here at the break of that, right? Still 45, almost 50 pips on the board. Could have been protected. Took 20, 30 down here. As you can see, maybe it rejected up there. But this is another confirmation. So while we are using that, and I want you to be good on the buys that confirm with the VIX and all those things, I want you to be good with that. There can be secondary confirmations. And this just comes from my experience in this market, right? When it wants to break this 238, I want to go with it. Because the majority of the time, it's going to break this 238 and run. And as you guys can see right now, we're not going to talk about any of these other signals because they're in not a good trading time. Now, the trading clock would have said green here because normally it is, but the Fed rate was literally being dropped. We shouldn't have jumped into this thing. We could have and then protected it at that 238 and take like 5-10 pips. But the news that was coming here next is just not a good place to be into this trade. And you would essentially still be in it. Okay. Yeah, that's the tool. It's here, it's really the opposite of it. So let me talk about that. Okay. It's really the opposite. You have to start with something that has a set of rules. Okay. A strategy. No, never use a fib. Okay. Not on US 30. You target previous structure 100%. But I am using solid sets, which is 100 pip TP. I'm using 100 pip TP. So essentially, I'm not targeting structure. I'm targeting 100 pips because that's my risk reward. Okay. No, it does not. And maybe that's something we could think about adding is tracking news times. You got to pay attention. It's part of my setup every day. I teach everybody to go in and take a look at what their news looks like for the day. I usually do it on a Monday and I make little notes of days that I should be aware of. So like when you guys join Jifu, you come over and you see what I do. Every Monday we do a mindset call. We talk about mindset, get the week started, and then we do a macro call where we go over what's going to happen, right? Like we went over Tuesday with the election, right? It was like, okay, I'm not getting involved in this market today. So we stayed away from that red folder, and literally beside the red folder said all day. So I was like, okay. And there was pips to be had. Okay. Right. There was pips to be had. Okay. So, and then the Fed news, for today. Both of those things very, very, very influential in the market. We got to be careful of. Okay. And then news hit, right? We shouldn't be any of these signals because news hit. Okay. You guys can hear my son's upset about something. If you guys can hear. Okay. So hopefully you guys got some lessons. We just went over some of this stuff, what happened today. Okay. But what we are going to do tomorrow is we are going to do a full back test of the week. So we'll go back, we'll do a replay view. We'll go over the VIX, the calls that are the ones that are attached to the VIX, how we manage them, the pips we get, and what we would have got as a result. I will have that anyways, because we do put all that into a spreadsheet, but we'll do all that tomorrow. Okay. And then we'll talk about the other things that we have in our group, right? Our signals, the tap to trade that's about to launch, right? We actually have an automation thing that we're going to talk to you guys about as well. And all the things that we provide our people in our group, all the stuff that you get through our membership. Okay. So before you guys go, I'm gonna go back to full screen here. And we're gonna talk a little bit about goals. Okay, so I'm gonna stop sharing. Everybody can see my face. There you go. Full J face. Okay. All right. Okay, so we talked about what we could be looking for on a monthly goal. So I want you guys to all realize something. Okay, this is really important in the growth in trading. Is that 5% a month is huge. And I'll tell you, I didn't really think that. When I first started trading, I didn't think 5% a month was enough. I didn't think that was good. First thing we're going to talk about is that 95% of traders in this world, they fail. So as long as you are taking positive and taking money out of the market, as long as you're positive, no matter what it is, 0.5%, you are more successful than 95% of the people doing this, because 95% lose. And if you can win at 0.5% a month, 2% a month, how much is your bank providing you? You'd be lucky if you get 0.5% a year in your savings account. Lucky, right? And so we have to just know, and we have to have a perspective in trading, is that as long as our account's moving forward, yeah. And I mean, I have a RRSP, and the only reason I've made any money on my RRSP is because of the bonus the government gives me. It's actually a negative in my investment percentage, but it's tax break, so I pump it full. But what you need to do is you have to have a perspective. And here's how perspective will change. Once you start playing, once you can do, here's the first way it changes, okay? Is that first, if you make any money, you are a successful trader, and that's what we came here to do. We came here to trade successfully, and that means month over month, we grow our money. Some months, maybe we lose, and that is possible. But at the end of the day, if we're positive in a year, we are a successful trader, okay? Okay, the one thing Derek just said it. The one thing compound interest needs is time, nothing else. It doesn't need anything else. It doesn't even really matter how much money you start with. If you can compound interest, it will grow, and it just needs time. Okay. The second part of the perspective, okay, is the 5% a month. Now, the first thing it does, if you can do 5% a month for a year, I know that doesn't seem like a lot, right? That's 60%. And you know, everybody's out here bragging, we do 70% a week and blah, 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 all the BS, right? All the lies and all that other stuff. It's not realistic. I'm not a too realistic person. I do believe that you can have those results. You're going to have to risk them to get it. And if you're okay with that, then go get it. It's here and it's available. But if you can do 5% a month, two things really change. And this is just, I'm telling you from my journey. The first thing is you start to trust yourself. Now, what happens when you're trading, right? Everybody who comes here wants to learn to trade so that they can live a different life, right? So you can go to a place where you're like, I got control of my money. I can make money. Does that happen when you are trying to get 5% a day and you end up losing 10% in a day? Does that confidence happen? No, because you don't trust yourself. Because you're like, when I take losses, it wipes my account, or I'm holding a trade for 8 days running the wrong direction because because I don't want to take a loss, right? So taking those losses and moving your account forward is going to build confidence in you that you can do it. That I have been positive for the past 3, 4, 5 months. I've been positive for 6 months now, 5 to 10%. You know what? The extra money I got sitting in my account that I've been holding on to, I can put that in a trading account. Or I can take some of that money and I can go buy a funded account. I don't like them that much, but I do know that some people will go get a $300 one and trade 50K. And as long as you're getting payouts, you can put that in your personal account so you can keep control of it. I'm not a big fan. I think it kind of robs you with the mentality it takes to grow your own money. But that's another opportunity. If you can do 5% a month, if you can do 5% a month, not only do you build confidence in you, you build confidence from others. And I'm going to tell you where things really changed for me. Really, really, really changed for me. When I started sitting on Zoom calls like this with billionaires, with people who all they do is look for places to put their money. All they do. You know how much they want a month? 3 to 5%. If you can do 3 to 5%, they literally sit across from me on another Zoom and go, where do I give you my money? How do I give it to you? How much do you want? At 5%, that has to put perspective into what you're doing trading daily. It has to put perspective in it. When a person who has so much money is like, if you can do 5% a month, I'll give you $1 billion. That is literally no joke. I sit in rooms with people. The company that I trade for has 4 billion in liquidity. They just got another upgrade. Okay. So I trade a big chunk of it. And I'm doing, I'd say 6 to 10% a month as it grows. They're just going to continuously give me more and give me more because our perspective needs to change a little bit. You know, and I understand perspective when you're trading a $500 account, right? 5% a month doesn't look so good, does it? when you're like, ah, I made 25 bucks this month, right? Right? That's not that we have to shape our minds to understand what this game is. You are playing in a game that has no limits. You are playing in a game that can't be won. It just needs to be played. And if you continue to play it the right way, you will have whatever you freaking want in trading. But as soon as you go outside that perspective and be like, it's only $500, I'll risk the whole thing. Who cares? That will change because you'll lose that $500 and you'll do it again. You'll lose it again. And instead of taking that 500 to 600 to maybe to 700, then adding 500 bucks, making it 12, then taking that 1200 to 15, then adding 1,000, making it 25, then taking that to 4 or 5K, then adding another two, right? That's when your account starts to grow because you build trust in yourself. And I'm telling you, it comes from small incremental games. Nobody does it. There is no trader in the world that trades that type of money that's trying to get 10% a day. He doesn't exist because that billionaire will not give it to him because he has to risk too much to give it. He has to risk too much to get that 10%. They will never do it because they're too smart with their money. You have to change your money mindset from what I can do in a day to what my account can do in a year. That's what it is. You have to change that mindset. And once you do, and you understand that, hey, man, we're not really in that big of a hurry. Most people come to trading in a hurry. And they're like, I got to do this and I got to do that. And I got bills to pay and I got to pay off my credit card. And what happens is they put a whole bunch of pressure on trading. And what happens? It's gone. And instead of being in the position you wanted to be in because you couldn't be patient, you lose it all. And now you're in a worse position because you came in here with that mindset. Now, we talked about mindset, right? And mindset is the most important thing. Anybody who trades with me or anybody who's done, I know there's a couple of people here who have done my personal stuff. It's something I make you do every single day, whether you trade or not, because your mind needs to be a certain way. And I'll tell you guys, I create these tools because I'm a data driven. I test them, I make them, I know they can work. The hardest part you're going to have to come and trade with me is becoming the person that can just follow what that tool tells them. I got these rules. I got to be patient enough. I got to take my 1 to 2% a day and I let my account grow. That is when trading changes. It's about you as an edge. It's not about the tool. The tool's amazing. As you can see, the tool works. It's whether you can follow it or not. And that is the test we're going to have. I'm going to give you the rules, the parameters. I've tested it. I've done it. I've done it with Killshot. I've done it with Supernova. I do it with everything I do. I'm going to give you that. And I know that if you can follow it, you can make it. But the difference is going to be the person on the other side of the scanner. I'll give you the tool to make it happen. And then we're going to work on you. Anyways, love you guys. I hope you had a wonderful day here at Bootcamp. Tomorrow, we'll see if we'll get a little bit of trading in. And then we'll go over everything that we offer here over at the company and see if this is something that you guys are interested in joining the community and rocking with us long term. So love you guys. Have a wonderful, wonderful day. We'll see you tomorrow.